Hello, everyone. Welcome to Live Trading Thursday. My name is David Verbruggen. I'm happy to be with you guys again. I was out of town last week, but back right now and excited to look at things with you guys because the market is hot. So we're going to be taking a look at some things. Keep in mind that all examples in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice. With that being said, we'd love to get your tickers in the comment box. So both YouTube and Facebook should have that comment box. So go ahead and there you go, Benjamin. He was on top of it. There's no way you typed it that fast. You must have had that copied and pasted all ready to go. So all right. So we're gonna roll through this here quickly because Benjamin's already got us loaded up with some great tickers to look at. So I should share my screen. That would be a good first step. It's like I'm rusty or something like that. All right, here we go. S&P overall market. You can see that we have been bullish as of late, right? The last bit, I mean, for a couple weeks here, we were just running on the 5 EMA. That's hot, right? We came up against this 4,300 level. I was like, ooh, that is strong resistance though. So we'll have to see what happens. For about a week, we hung out there, and then we broke out above that and had a little bit of an exhaustion move. Ran into this. Let me pull this back here. You can see kind of this uptrending resistance line, ran into that, pulled back some, and then today opened up at the 10, starting to move up a little bit. Now, it's been interesting because, as you guys know, we've kind of been waiting for a time that the market would actually turn around and head back down. That's kind of been the anticipation. Why? There still are all the warning signs in the market. Those haven't gone away. Right? There's still all these warning signs. And so, when we ask ourselves, what should the market do? The market should go down. But as traders, we need to take a step back oftentimes and ask ourselves, well, what is happening? Okay. So when we look at what is happening, you can see that for most of this year, the market has been going up, right? At the start of the year, there we go, right around there. We were about 3,800 or so. And right now we're at 43.66. So the market has been going up. And how high can it go? Well, I would not be surprised at this point if we eventually, sometime, maybe even the summer, maybe in the fall, I don't know, sometime later on, if we retest these highs of 4,800. I'm not predicting that. We're not in the business of predicting what the market's going to do. But I'm just saying I wouldn't be surprised. Right now, the price is actually closer to those highs than it is to those lows that we experienced. So it's made a lot of upward movement so far. This bear market of 2022, that's pretty much over. But I mean, are we going to hit those highs and then move down again? We're just going to have to wait and see. But as traders, thankfully, we don't have to know what's going to happen in the future. We can just look at what's the short-term trend. The short-term trend is bullish. What does that mean for us? We need to be bullish for the most part. There are still some very pretty bearish charts out there. And if you find a pretty bearish chart, there's nothing that needs to stop you from trading that. We should be cautious regardless of whether we're going bullish or bearish. So, but right now that the market has been bullish. Now, could you look at this and go, "Ooh, wow, we're closer to this resistance line than this uptrending support line"? Yeah, you could say that. You could say maybe I want to see it retrace back down to this 4,300 level. That was a pretty significant line, so that could turn into some support. Today's candle right now, while up a little bit, it hit the 5 EMA, started moving down. Not very convincing. Not very convincing. So we're just going to have to see. But all right, let's jump into this. Let's look at these patterns that Benjamin has sent us here. ADP is the first one we're going to look at. All right, ADP, you can see we must have put on this bear call credit spread. And as the market got pretty hot, this one didn't work out, right? I would say that it was not wrong to put on this bear call when we put it on. Look at that. Started rolling down, moved up. Actually, did we even put it on, or did we just look at that? We might have just looked at that. I don't think we put it on necessarily. But let's say we had put it on. The way that I like to manage it, stop out day would have been June 13th, about a week ago. So anyway, I'm going to get rid of this guy to kind of clear up that. With this line, got to pull this over. That line's still pretty good right there. All right, let's make sure that guy gets saved. There we go. So that line is still intact, but now I'm also seeing this right here, right? In the very short term, look at that. Ooh, decision time. What are we going to do here, right? That's an uptrending, or I'm sorry, an ascending wedge. A little bit of an ascending wedge right there. The uptrending support is much shorter term than this longer term resistance that has been there. So we'll have to see. Benjamin, I would say on ADP, I'd like to hold off and see what it does. If it can break out, then we could be looking at a bullish entry. But there's quite a bit of history on this line just in the last 6 months even. You know, that was some solid support right there. Resistance, resistance, resistance again. We haven't broken that yet, so I don't want to pregame it. So, yeah, so I would hold off on this guy, but maybe keep it on a watch list, because if it does break out, you know, it could be making some really nice moves after that. So there you go. That's ADP. PRI is next. PRI, Primerica. Let's take a look. Ooh, nice pattern. Okay, so it's just been chugging along upward here. So that's nice. I want to get how long has it been doing that here? All right, for about a year now. About a year. It's moved up nicely. Definitely been beating the market. Couple things to watch out for, though. See on this crazy move right here after that earnings report, which, yeah, that was a good earnings report. See those highs right there? We're kind of right there. Let me drop I'm just going to drop a horizontal line for ease. Just at the top of that wick. See how it catches almost perfectly that line right there. So here's another case again where we can throw an uptrending support line. Okay, that one's not going to be as pretty, this uptrending support line. So I'm going to take that one off. But you can see how it is uptrending and running up against this resistance line. Same thing. Kind of want to see this line broken. It could happen as early as next week, so we'll have to see. But you can keep that one on a list. That one's been pretty hot. That's nice. All right. Robinhood. Taking a look at Robinhood. Let's see what we got. This one I actually have on a watch list of mine for a rolling chart. See how it's just been kind of in this, this trading in this range for a while. And even more recently, it has gotten tighter. You could put a bit of a resistance line right about there. So we can draw that. But where is it right now? It's been falling off resistance and it's kind of in the middle there. Nothing that I would do with this right now. You can keep it on watch list because it's been trading in a range. And if you get a nice bounce, I think, I don't know if we did in here, but at some point we did a paper trade. I think we took this entry right here and we followed it for a couple of weeks and exited somewhere around here. So that was a nice little paper trade right there. But this guy, you know, you can keep it on a watch list. I'd wait for it to bounce off that support, right? That's a pretty decent support line right there. So I'd wait for it to happen. And you know what? It's a low dollar stock. So you could even just do step one stock trade. Nothing wrong with that, right? I mean, if you got in at $8.60 or whatever, and then you rode it up to $9.75, you know, that's better than a 10% gain on a stock trade. That's fantastic. You can do that in a matter of just a few weeks. It happened here. Keep that one on watch list. Keep an eye on it. All right, GameStop. Taking a look here. Okay, GameStop, you know, I think I've said this before. I still feel like it can be quite volatile, right? Everyone remembers the GameStop thing. So I'm usually hesitant to trade GameStop. And you can see, you know, it's still making, those are still big moves, right? Look at this. Down here at $16 a share, a few days later, yeah, after earnings, $26 a share. You know, back down to 17, 18 or so, and then back up to 27. Those are still big swings. And every time earnings happens, goodness gracious, look at this. Massive jump up. And then here, earnings happened again, and then massive drop down, right? And they even did better on earnings than they expected. Hey, we didn't lose as much money as we thought. And then after it gapped down, it made its way back up, and within 4 days, eclipsed that high right there. So still a lot of volatility. I would say, let's see here. Let's get rid of this line. Let's see if we can get some lines going. All right, let's try that one right there. So that line makes sense to me. I don't see much on the way of on the resistance side that really works very well. But what's the pattern we're seeing, right? I don't see much of a pattern. If you could call volatility a pattern, I would just say that's what it is. It's just volatile, but there's nothing clean to work with. Yeah, if you happen to catch it on this day right here with call options, could you easily double your money that week? Yeah, you could. You could. But how would we know on this day that it's going to go beat the high? We don't, right? That's why we want to rely on pretty patterns. I've had some prettier patterns in some of these guys that we've already looked at, but GameStop is just so much volatility. I think it's hard to have a good pattern. All right. MRO. Let's take a look at MRO. Marathon Oil. Okay. Again, look at this. We had entered this, or we had talked about either here or in another webinar, we had talked about this bear call credit spread. And it looked good at the time of entry. I'll get rid of that guy. That one would not have worked. Well, in a way, depends on how you manage it, right? My management style of getting out when the short strike is broken, May 24th would have been the exit day. But if one had just let it ride, they would have gotten lucky and would have been able to make the full profit on that one. So with all that being said, what's the pattern that we're seeing here? Mostly to the downside, right? Let's clear up a couple of these lines here as well. And, this line as well hasn't been respecting that one recently. And let's try this right here. Got a little bit of that downtrend right there. So a little bit of a descending wedge in this case now. Kind of in the middle of that wedge. Not much that I would do with this right now. Right? I don't want to get bullish on a descending wedge. I'd love for it to break down below this 21 level before I got bearish on it. So you can keep an eye on it, but nothing much to do there right now. All right, I think Tesla, Apple, Shopify, those are the ones next. All right, Tesla. All right, so Tesla, interesting one. Check this out. Got super hot, right? I mean, it was just a few weeks ago. We were down like $160 a share. Increased almost 40% or so, 30-40% in just a few weeks. Finally had a decent bearish candle yesterday. This was the first day that it closed. Well, no, it closed down a little bit on that day. But anyways, today looking like we're picking up right off the 10-day again and racing up. That's a tough pattern to catch. Here's a quick thing with something like Tesla. When it's riding the 5 EMA like that, when it's super hot, you can enter, but it's going to be hard to have a decent technical stop out, right? The best technical stop out that I could come up for this would just be put it below the 5 EMA at some point, right? Somewhere below the 5 EMA. And as far as the entry goes, again, it's tough to catch a good entry. Some point you just got to get in, right? This is one of those where you're just hopping on, hoping the train just keeps going. It can, right? If you caught this pattern here and halfway through on this day, you're looking at, let's do this. All right. Let's say you're looking at this right here. Based off of everything that we teach, is this a good entry? No, not at all, right? It's just been racing up. It's well above the 5 EMA. But you got to look at the history of Tesla and see the moves that it's made. You can see other stocks that sometimes make those moves. Is it wrong to say, you know what? Okay, I understand the risk here. I understand that it could come back down the next day and I could stop out at, we'll call it 220, right? And if I'm using options, I could lose most of my premium in that. I understand that risk. I'm willing to accept that risk. And then I'm willing to manage the risk by stopping out when I need to and at some point taking profits too. So if you're willing to do that, yes, you could take that entry, right? And then you would be pretty happy the next few days. Even after that bit of a move down, if you were still in, that's a really big profit right there. You got in about 235. Right now it's at 262. You do that on options, that's a big profit. So then the question is right now, is that a good entry? Well, again, I wouldn't necessarily say it's a good entry. It was in this whole run right here, it was above the 5 EMA, and now it actually got below the 10-day for just briefly. Opened up at the 10-day essentially and moved up from there. Now, is it wrong for one to say, I understand the risk? Like if I get in right now, I understand the risk, and I understand that, I could lose a good chunk of my premium if I'm using call options, and I might put a stop at like 245 or something like that. I understand it and I accept it, and then I'm willing to manage it. Is it wrong to hop in right there? No, not necessarily. Not necessarily. So you could do that. You could hop in right there and see, can it continue to move up? It might not. Now keep in mind with Tesla, it can do crazy moves up. It can also do crazy moves down. Look at this. Back here was at 310. Back in September, $310. 3 months later is about a third. Tesla got cut into a third in like 3 months. So it can move down quickly, just like it can move up quickly, right? So all those things you just got to be aware of with Tesla. It's kind of a different beast to trade. Usually you're not going to get a pretty entry. It's just kind of hop along for the ride. And if it ends up turning around and going the wrong direction, just get off, right? That's how that one works. All right, Apple and Shopify. So Apple, this one has been a prettier trend, right? And you can see we've got a couple paper trades on in this account right here. And it's just been chugging along, right? I think I showed this one time. Let's turn off some things. Let's turn that off. Oops. I'm doing it wrong here. There we go. Let's turn the price off. Okay, that'll be good enough for now. You can see the 5-day, which is the green dash, and the 10-day, which is the solid red. You can see how it just came down, touch, 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 got close there, touch there, got close. It's not doing quite as much there, but it's been pretty overall. It's really been very pretty pattern. And what do we have today? Right? Today we have another bounce off the 10-day and a move up. Could that be considered as an entry? If we had looked at it here, that was a nice entry. It moved up after that, right? 20-day was here. That was a 20-day bounce. But there's a 10-day bounce. There's a 10-day bounce. So could one look at this for a variety of trades? Maybe a step 2 could work. No, it could work, but I wonder if there are better options. Just because it's not racing up as kind of like Tesla, right? If I were to trade Tesla, I'd be hopping on a step 2 call, right? For Apple right now, I might do an aggressive step 3 credit spread, potentially a step 4 bull call, but maybe if I caught it earlier, right? I'm liking the step 3 best personally. You could put it pretty aggressive, maybe like 182 as your short strike. You could get a little more conservative, like 180 as a short strike, and get that 20 days protection. So those are a couple of things to be thinking about there. Shopify. Now that one's been moving up as well. Oh, I missed that somehow. Look at that on earnings. Big move up right there. And then how did I miss that? I missed something here, but that's okay. That's okay. I was looking at it back here when it was following this line really nicely, and I missed that it had jumped up so much. So what's the new pattern, right? Oh, I remember it now. Okay, because I remember saying, hey, this was a really pretty pattern, and yeah, it shot up, but that's kind of a bummer because it destroyed the pretty pattern. What do you do now? You got to wait for a new pattern. Is it oh, now? Okay, look at this. The 20-day held pretty nicely. A couple days it went down below, but other than that, 20-day held pretty nicely as support, and it came back down today, producing a bounce up off of that 20-day. Is that an entry? Maybe. Do you want more confirmation than that, or are you willing to take that? Right? That's a question that you kind of have to ask yourself. Earnings July 26. Okay, you can still use the July 21. If you're going to do like a month-long credit spread, July 21 is still there for you. That can still work. So many things that could be considered on this one as well. This entry is a little bit more aggressive in my opinion because the pattern isn't as pretty and established. So that is Shopify. All right, Benjamin, we got through your list. I knew we'd get there. All right, Joseph, I see you on there. All right, LNG. Let's take a look at LNG for Joseph. Here we go. All right, LNG. So this one kind of moving down a little bit. Let's grab some lines here to see this a little bit better. You can see that right around there. That's actually a better downtrending resistance line than I thought it would be. So then what do you do with this, right? Obviously, we're not going to get bullish right now. Potentially bearish, okay? Potentially bearish. It depends on, do you like that pattern enough, right? And then where are you going to put the short strike if you're going to do like a bear call, for example? If you're going to do a bear call, that short strike for me, I'd be looking at probably 153, maybe even a little bit higher, 154 or so, because then you get above this line right here. So I could see if there's money in there. If it fell down a little bit more, you could consider just a straight put. Bear call would be nice, but if you can catch a put and it falls down back to 138, 136 range, somewhere in here, that could be a really nice win right there. So that could be a really nice trade. So, but you do want to make sure that it confirms that it's willing to roll down, right? It was down to the 10-day today, and then it moved back up. So I'm not convinced on today's candle that it really wants to continue moving down. All right, there we go. I love all the interaction in here. All right, we got a couple more we're going to look at. We'll wrap it up with Ford and General Electric. We'll hit those real quick here. So Ford, that one's been making some nice moves up recently. Let me grab this line, pull that over. I think actually it might go up a little bit right about there. So there we go. So Ford hit the resistance, started rolling down, right? Ford actually in a nice roll. Look at that. I keep track of some rolling patterns, and Ford might go on my monthly rolling pattern. Take a look at that. That's a nice roll starting to form. Love for that to come back down and maybe right after earnings produce a nice entry. We talked earlier on the previous rolling pattern what you could do even just with a simple stock trade. Imagine getting in on a simple stock trade at like $8.50 and then out at 14. Do the math on that. You're in that trade for, I don't know, a month or so. Annualized ROI for a simple stock trade. Fantastic. Of course, you could do options as well. You could do covered call on this as well. So many things you can do with a rolling pattern. Rolling patterns can be fun. All right, we're going to wrap it up with General Electric here. General Electric's been a hot one. You can see we've got a paper trade on right now. There's a covered call, actually. 100 shares of General Electric with the cover call right at 107. So we'll see what happens in this one, right? You can see it kind of produced, let me zoom in here. All right, why did that not zoom? Let's do a quick refresh, see if that works there. Perfect. There we go. You can see produce a little bounce up off this uptrending support line yesterday. Got some confirmation today. So this could still be considered for a variety of different trades, you know. Credit spread. You can see we did several credit spreads on this guy in the past. Right now I got a little covered call going on it just because it kind of it flattened out a little bit. You know, it wasn't as hot as it had been. But General Electric still producing a nice pattern. So definitely things could be done there. Absolutely. All right, guys. I want to leave you guys with something here. You know, we're on Charts by Treyway all the time, right? We're on Charts by Treyway. And if you're like, I want to learn more about Charts by Treyway, we have a full list of tutorials and trainings on Charts by Treyway on YouTube, right? So I just dropped a link in there. There's probably 8 hours worth of training. I know in this webinar, we're primarily just looking at, you know, the charts, and we're just going, you know, ticker to ticker to ticker. But there's a whole lot more in Charts by Treyway, you know, with the journal, screeners, scans, all kinds of things, right? So check out that. You know, those are free trainings on there. So feel free to just check that out on YouTube, and you can learn all about Charts by Treyway and everything it has to offer. All right, guys, that's going to wrap it up for today. Thanks for being on. I see 17 of you. That's fantastic. I think that's a record. I think that's a record. And Benjamin, thank you for Benjamin and Joseph. Thank you for all the patterns you guys brought forward, all the tickers that we got to look at. So that was a good way to start the day. All right, guys, we'll talk to you later.